Yeah, I wonder what your thoughts are on the fact that we now have a company that, from a GAAP earnings perspective, has been profitable for 5 quarters. They're growing their free cash flow based on, and particularly based on the forecast we have for 2024. And we did get commentary from executives, including Alex Karp, the CEO over there, that basically they're able to do more with less as they take these generative AI and software capabilities that they're offering to commercial and government customers, and they're applying them internally as well. How does that play out in terms of the cost savings and what that does for the profitability of this company?
Yeah, that is a very interesting aspect of adopting AI. This is a company that's led in the application of machine learning for more than 20 years. It's just a year ago that they started incorporating generative AI capabilities. Not only did they produce an external-facing product set for enterprise customers, as we just discussed, they're also using those tools internally, and they've embraced that internally. At the same time, they did what a lot of technology companies did last year, which is start reducing headcount while they were growing by taking it out of places where growth no longer existed and refocusing it on places where growth was emerging.
Mixed outlook, valuation, and AI growth potential. It's obviously crucial to keep tabs on Palantir Technologies, especially given its recent performance. The company has made significant strides, particularly with its shift towards AI technology, resulting in strong financial results and a surge in stock prices. However, HSBC's recent downgrade has sparked some concerns among investors. How will this impact the company's trajectory going forward?
Hey, good morning, Andrew. Over to you. We're looking at Palantir shares right now after a beat on the top line and a beat on the bottom line. Profit was 7 cents compared to the estimates of 6 cents per share. You can see shares are up just about 5% right now. Current quarter guidance also basically in line. This is also Palantir's 4th quarter of profitability, qualifying it for inclusion in the S&P 500. CEO Alex Karp, he told me yesterday it's very important to him because it makes the company more accessible and also widely held, as it would then be included in the SPY ETF.
Palantir had an impressive performance in its 4Q23 earnings report, surpassing expectations and sparking enthusiasm among investors. The company's stock price soared by over 30%, reaching its highest level since November 2021. However, this rapid surge has led to concerns about the stock being heavily overbought, posing risks for investors who chase the price. Despite the strong sales momentum in the U.S. commercial sector, some analysts believe that Palantir's valuation is now too high, especially considering its sales growth rate of 20% in Q4-23 and 17% for the full year, which may not justify the current price multiple of 20 times sales. Examining Palantir's financial summary for Q4 and FY 2023, the company reported adjusted earnings of 8 cents per share, with sales increasing by 20% year over year to $608.4 million. While these results were positive, they may not have warranted the significant increase in the company's market valuation. Despite the growing demand for Palantir AI, particularly in the commercial sector, it did not translate into a substantial bump in sales growth rate, raising questions about the company's ability to outgrow the market. The AI machine learning market is projected to grow at a rate of 19% annually until the end of the decade, highlighting the potential for growth in this sector. However, Palantir's sales growth rate of 20% in Q4-23 and 17% in 2023 may not be sufficient to justify its current valuation. While the company's net profits in Q4-23 increased to $93.4 million, demonstrating its ability to turn a profit, concerns remain about its high valuation and whether it can sustain its growth momentum. Now, how has Palantir Technologies managed to attract such attention in the market? Well, there are a couple of key reasons. First off, there's been growing interest in Palantir AI, especially within the U.S. commercial sector. Additionally, the fact that the company is finally turning a profit has certainly caught investors' eyes. In 2023, Palantir reported total profits of $209.8 million, marking its first profitable year since its inception 21 years ago. However, amidst the celebrations, there's a concerning trend regarding Palantir's stock-based compensation. Despite the profitability, the excessive levels of executive compensation, primarily through SBC, raise serious questions about alignment of interests. Adjusting for SBC expenses, Palantir's profit for 2023 would have been a staggering $685.7 million, more than triple what was reported. This disparity underscores the significant impact of SBC on the company's bottom line. And now, why does HSBC's downgrade of Palantir Technologies stock matter? Well, it's making headlines today as analysts at HSBC decided to lower their rating on the big data analytics company's shares. This downgrade from analyst Stephen Bursey now places the stock at a hold rating. To give some context, the overall consensus rating for PLTR stock, based on 14 opinions, is a reduced rating. Despite the downgrade, HSBC maintained its price target of $22 per share for PLTR stock. This suggests a potential downside of 8% compared to its previous closing price. However, it's worth noting that this target still stands above the analyst consensus price prediction of $15.68 per share. So, what prompted this downgrade? According to Bursey, Palantir shares are trading at a non-GAAP price-to-earnings ratio of 76.4 times for 2024 estimates, significantly higher than the sector median of 35.4 times. This premium, particularly on GAAP-based metrics due to Palantir's high share-based compensation, was cited as the reason behind the downgrade. Despite the downgrade, the analyst remains optimistic about the company's long-term prospects, emphasizing the increasing demand for its artificial intelligence products. Another important aspect to consider is the sentiment among deep-pocketed investors towards Palantir Technologies. Recent data shows a bullish stance among these investors, which could signal significant developments ahead. While the exact identities of these investors remain undisclosed, their actions, as revealed through public options records, indicate substantial activities surrounding Palantir stock. Benzinga's options scanner recently highlighted 11 notable options activities related to Palantir Technologies. Among these activities, 54% of investors lean bullish, while 45% take a bearish stance. This divide in sentiment suggests uncertainty but also potential opportunities. Breaking down the options, 3 puts totaling $502,266 and 8 calls totaling $350,555. This mix of options indicates varying expectations regarding Palantir's future performance. Interestingly, based on trading activity, these investors seem to be eyeing a price range of $10 to $30 for Palantir Technologies over the recent 3 months. But before we move on, we just want to thank you for watching this far.
It will take longer. It's harder to take people out of government and put them in a boot camp or an AI boot camp to start embracing new applications. The process for government acquisition is a multi-year process, but they're well on their way. They already led in that regard in terms of building government applications, but this is a multi-year ramp. They're not going to be able to have an inflection point this year. They'll be able to sell one government at a time, one agency at a time, and ramp that up over time. But again, they already go into this as the leading dual-purpose software company for the government. And so they're in a very advantageous position. It's just unlikely that we'll see an inflection point this year in that business.
So, should you join the Palantir frenzy or stay on the sidelines? It's a valid question, especially when a stock has recently surged. In the case of Palantir, there's a lot to consider. The recent jump in PLTR stock was fueled by impressive financial results and optimistic future guidance. Palantir's shift towards AI technology has been well received by investors, leading to substantial gains in its stock price. The company's profitability and strong revenue growth in the U.S. commercial sector have contributed to this positive sentiment. However, it's essential to approach investing in Palantir with caution due to its rich valuation and the risk of market fluctuations. Palantir Technologies aims for further growth in 2024, with sales expected to increase by approximately 19.5%. While this outlook is promising, the technical setup of PLTR stock suggests potential consolidation or pullback in the near term. Despite its impressive performance, Palantir Technologies stock is considered to be heavily overvalued, raising concerns about sustainability. The current market valuation far exceeds traditional metrics, indicating a potential bubble in the stock. Following HSBC's recent downgrade of Palantir Technologies, which shifted its rating to hold with a price target of $22, analysts highlighted a combination of factors influencing their decision. Despite Palantir's strong financial performance and projected growth in the AI market, concerns over the stock's valuation prompted the downgrade. Similarly, Citi's recent upgrade to hold with a $20 price target reflects a cautious outlook. The surge in Palantir's stock price following its earnings release has raised red flags for some analysts, indicating potential overvaluation and vulnerability. With technical indicators signaling overbought conditions and a possible pullback, investors are advised to proceed with caution. Moreover, Palantir's excessive executive compensation and limited evidence of accelerated sales growth further contribute to concerns about its sustainability. The outlook for 2024 suggests modest sales growth, which may not justify the current high valuation multiples. Considering these factors, investors are urged to conduct thorough due diligence and risk assessment before making investment decisions. Diversification and a long-term perspective are essential strategies for navigating market volatility and competition. So, is Palantir's current valuation justified, or are investors underestimating the risks associated with its stock? Join the conversation in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about Palantir's stock outlook, I highly recommend watching this amazing video. Simply click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.